Welcome to the Sector Spin with Terry. In this video series, I share with you what I'm watching each week in various sector industry subgroups. This week, I want to revisit the Spaceflight Technology stocks that I last covered back on February 18th of this year. It seems like more and more commercial space launches are happening and being more successful. This past week, we saw SpaceX's Dragon capsule successfully return the astronauts from the International Space Station in the first nighttime splashdown recovery since 1968. Now, although SpaceX is still privately held, let's take a look at the commercial spaceflight companies either in competition or in support of those missions. Now, back in February, I shared a short list of stocks in this industry, and let's see how they performed since then. Now, I've got this list sorted here by the current relative strength ratio, and we'll start with Boeing. And let's go back. So February 18th would be right about here. And since February 18th, Boeing has moved higher, but it found overhead resistance around 275, and since doing so on March 15th, it has pulled back from those levels about 20%. Now, Boeing has actually been advancing higher since settling those lows back here in November. But this uptrend you can see here is overlapping and not exactly impulsive. Now, the most recent correction has been in place since March 15th, possibly coming to completion with support levels looming, I would say around this 210 to 220 mark. All right, the next one here, this is Procure. Well, this is the second highest relative strength. Now, this chart looks a bit different. Procure is an exchange-traded fund that holds many of different spaceflight companies. This one appears to be in an ongoing triangulation corrective pattern since reaching up to the 32 levels in early February, right before our last analysis. It's not clear to me yet whether this correction is completed, but there are some fairly strong support levels here between 27 and 28 that may hold it. If it is indeed a triangle, we get the completion out of the triangle, then we should see a push higher to reestablish itself back up above this 30.5 resistance zone and this 3220. Northrop Grumman is third on my list here. Now, Northrop Grumman has been advancing rapidly ever since, here's February 18th, right about there. Since we looked at it back then, it has decisively broken through this longer-term downtrend channel cleanly and is pushing. This happened back, March 26th or so. So there is your entry point. It hasn't looked back yet. Now, it's now rapidly approaching its pre-COVID high levels, around $380, $383, where it may actually base for a while. I would think that it would need to base for a while to allow some of these moving averages to play a bit of a catch-up. You can see here's the 20-day, here's the 50-day. The 50 is crossed above the 200-day as of April 20th. Over here in the weekly RRG, you can see Northrop Grumman with a blue leading trend and moving in a strong easterly direction towards this leading quadrant. Now, I'd advise waiting on a pullback before opening any new entries here. There was a brief period of a pullback once the new trend was established where you could have re-entered the trade right here on this gap up April 29th, where it re-accelerated, bounced off of the 330 support level, made a new high. This would have been a second entry point or or even possibly a first entry point if you were playing a little bit more conservative here. So I see further upside, but we do have this overhead resistance we need to work on and clear. Now, of course, not all of these stocks have fared well since February. Let's take a look at Maxar Technologies. And this is this week's price performance. You can see Maxar is down over 21% this week alone. Maxar has continued really in a consolidation since mid-January. And with this recent decline, the price has now actually dipped below the 200-day simple moving average. Note also the 50-day and the 20-day simple moving averages are actually moving down in parallel. Now this stock has taken some serious technical damage, which will take some time to repair. Also, look here at Sir Richard Branson's Virgin Galactic Holdings. They're down nearly 15% this week, 13.8 as we record this here. The nearly year-long uptrend channel, though, I will say, and there's been a lot of choppy action here, but this nearly year-long uptrend channel has now been broken to the downside. So we'll likely see further declines until a new support level can be established and held here. Guys, I'd love to hear from you down in the comments section below if you followed any of my recommendations back in February and placed any trades in this particular industry group. Let me know how you did and what your go-forward plans are for those positions you are holding. As always, best wishes in your trading ventures, and be sure to check us out at tradinganalysis.com.